All right, back in the action once again. Hope you guys and gals had a fantastic day out there, but it's time to get back to work tonight, though. Thursday evening, after all. It's June the 11th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me, because my job tonight is to help us find the best entry setups for tomorrow. That's a Finally Friday trading session, and I got a jam-packed video in store for you guys tonight. The charts are already in the background, as you can see. We got the gold, we got the oil, and of course, we got the E-mini S&P all locked and loaded. A lot to talk about tonight. Anytime we see a day like we saw today, one of the biggest moves we've seen in over a month and a half now, we know tomorrow we'll have some very specific setups. I'm going to break all this down for you guys tonight on the video. Before we jump into the action, though, tonight, I just want to remind you guys to make sure you subscribe to this YouTube channel. That way you never miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions for me tonight, drop those questions in the comments section below. I'll circle back and get those answered after we finish up tonight. And how about a thumbs up here tonight? Tune in every evening. If you tune in every evening to watch this video, if you rely on this newsletter to get your mind right and get your charts right, hit that thumbs up button for me here tonight. Always appreciate you guys supporting this channel by subscribing, dropping those questions in the comments section below, and hitting that thumbs up button for me if you guys find value in our nightly newsletter. Speaking of which, let's get this newsletter going here tonight, JJ. I'm a little bit late here, as you can see. It's been a pretty busy day in the ops, but I want to make sure I finish the session today on a good note with you guys. Let's jump in tonight with a calendar for tomorrow. Let's take a look at the schedule for tomorrow. Tomorrow, of course, is Friday, a Finally Friday session in our trade room. Now, what do we know about tomorrow? Boy, a lot going on here for tomorrow. It's not just the end of the week. It is, of course, the end of the week. Anytime we have a Friday trading session, usually the best trades on a Friday are going to be somewhere between 8 o'clock and about 10:30, 10:45 a.m. Eastern Time. It's going to be a smaller window of opportunity. I'm not a big fan trading late in the day on Friday, and you really got to have a good reason to be trading after 11 o'clock on a Friday morning. So early in, early out. If you have a choice, get to your desk earlier tomorrow, just because with all the movement we saw today, we're going to have a lot to work with tomorrow morning. Hopefully tomorrow will be a pretty darn good finish of the week. Now, let's talk about tomorrow, of course, being a Friday, early in, early out. We saw this we saw this big move today, right? Big move down. In fact, what was the biggest drop since mid-March, I think it was, on the S&P. NASDAQ held up pretty well. But, for the most part, though, oil's down 7%. S&P got killed today. Gold held up pretty well, obviously, right, being a kind of a counterbalancing of these markets. But, whenever I see these big collapses, right, like we saw today, right, these big collapses, usually the following day is going to be a little bit choppy, and we'll talk about the plan for this in a second. The reason why I mentioned it here, though, is because if I had to guess tomorrow, I'll bet you're going to see a lot of chop and slop early in the session tomorrow as people try to kind of get their balance, right, as moving averages kind of catch up to the current price action. And then I would imagine probably 10 o'clock, 10:15. I normally would say earlier the better tomorrow, but I have a feeling tomorrow it's going to be a bit bloody, probably a little bit, a little bit range bound, a little bit choppy tomorrow morning early as the markets settle in. And then I'll be keeping my eyes open towards the end of the session, right? So, like I said earlier, you got to have a good reason after 11 o'clock tomorrow, but I'm thinking 10:15, 10:30, 10:45, right as the dust begins to settle tomorrow morning. Again, I would imagine things going to be a little bit choppy tomorrow, usually after you get these big down days or big up days. The following day is oftentimes a pretty choppy range. And so I would definitely say tomorrow is one of those days where, yes, I want to be there early because I always want to trade early on a Friday. But if I had to guess, I would guess the patient traders tomorrow are going to be rewarded. So patience is likely going to be a key factor in tomorrow's trading session. So that's kind of a bird's eye view of this. Obviously, you guys have probably read all the headlines already. Markets taking a big dive today on concerns about the second wave of the coronavirus, right? Hearing from the Fed last night and how they're not expecting to have a recovery for a couple years. And so now we're hearing more about additional stimulus. And of course, we got quad witching going on next week. So there's a lot going on out there in these markets right now as we go into tomorrow's trading session. We really don't have a lot of news on the schedule. As you can see, there's not a lot on the calendar for tomorrow. Import, exports, consumer sentiment. Again, if I had my way tomorrow, I would be at your desk 9:30 to 10:45 looking for that kind of late morning rally failure, reversal, something we're going to find tomorrow, right? Probably after the dust settles here in the trade room for tomorrow. Now, don't forget, we'll be in our trade room and every morning at 8 o'clock Eastern time. I'm going to put all of the membership links for you guys so you can come out and trade with me tomorrow morning at the opening bell. Again, going to be a member. I'll put all of the membership information for you guys down in the description of this YouTube video. So get registered and come execute the plan with me tomorrow, 8 o'clock Eastern time. Also, as I mentioned in last night's newsletter, I'm going to be off on the newsletter next week. So no newsletter next week for quadruple witching. I will still, of course, be working with clients, of course, throughout the week next week, but I will not, of course, be here in the evenings on our nightly newsletter. It's also important to remember, too, next week we're probably going to see rollover on oil around the 18th. We'll probably see the Eminis roll over next week. Gold will not be rolling over, so be aware, Wednesday, Thursday, Friday next week, that's when quad witching does tend to kick up a lot more volatility, and expect to see rollover on oil and, of course, the S&P. If you're a client of mine, right, obviously we'll work together next week as well, but I will not be here on the newsletter next week. I'll be off next week and be back the following week to resume our normal schedule. All right, so now you know how to get the links for tomorrow morning's trade room. Get there early, but again, I would say be patient. I'll bet the patient traders tomorrow are going to be the ones that get rewarded, unlike a day like today where it was just basically sell everything as the market took off the downside, unless, of course, you were trading gold. Now, speaking of gold, got a bunch of charts all ready for us here tonight. We got the Eminis, got the oil, and, of course, got the gold here on our radar tonight. Everyone's talking about this big bloodbath on the Eminis here today. Let's open up that chart here to begin with here tonight. And real quickly, you'll notice this is a 10,000 tick chart here on the E-mini S&P. A lot of folks ask me in the comments why I alternate my time frames. It has a lot to do with volume, right? The more volume we get on that day, the more candlesticks we get. And as the volume kicks up, like we saw today, I think today we saw, 3.5 million contracts traded. On a day over 3 million, you're going to need to use a slower time frame, or else you'll simply have too many candlesticks. So we'll talk more about the nuances of kind of fitting the right time frame for the market personality. We'll talk about that tomorrow in our trade room. We always open up our trade room and we look at the volume overnight and we adjust our time frames, because these are tick charts, right? So tick charts, the more volume you have coming in, the more candlesticks. Well, more candlesticks means more noise. And so we play a balancing act every morning in our trade room of adjusting based on the overnight volume. We'll talk more about that tomorrow. But be aware, 10,000 tick chart here on the S&P, just in case you're following along here at home. And the reason why it's a 10,000 tick and not a 7,000 tick or a 6,000 tick like I usually use is because we saw almost twice the volume in today's trading session. Okay, let's jump into it here. What do we know about the S&P? We know this was basically a cinder block tossed in the Hudson River is basically what this thing was, right? We talked about this yesterday. The S&P was obviously bearish going into the close yesterday, but we talked about, right, a 1, 2, 3 move down and getting short right off the high of that new channel. Now, obviously, I didn't know we were going to go all the way to 3,000. I did mention last night, though, there was plenty of wide open space. I wish I would have known. I wish they would have given us a heads up. We're going to go all the way back down to fill that darn, right? That's where we left off last week, right? So pretty incredible that move here. But, we talked about this, right? How it's almost like a little paper napkin and how they kind of broke right through it in the bottom. Just fell right out of it. So anyways, you don't need me to tell you that we are bearish right now. How do we trade something like this? The first thing I think of is tomorrow's going to be a bit messy, because the markets have to catch up to this. The moving average got to catch up, right? The band's got to catch up. Everybody's got to kind of catch up to where this thing's settled. So tomorrow, be aware, like I said, you're going to probably see a little bit of chop in those first couple hours. Hopefully I'm wrong. Hopefully I'm dead wrong on this tomorrow, but I would imagine magic. You're going to see some chop, see some slop. You are definitely going to see a lot of people trying to pick bottoms on this. So trying to avoid the temptation to pick bottoms on this, those bottom pickers, all the people who bought the last dip, right? They're going to think this one is the same thing. Probably not going to be the same thing, but we'll talk about how to trade it nonetheless here tonight. Now, when I see a big move down like this, there are really 4 scenarios I'm looking for here tomorrow. There's 4 possible things that can happen after we see a big move down. The first one, which is the one I would plan on tomorrow, is a spike in range. That is a spike down into a trading range. The second one, right, which is probably going to be the next possible scenario, is a flag pattern. This is one I hope we get tomorrow. Flag patterns would be, they're a little challenging, but we'll talk about the best way to trade them here in a few moments. Flag pattern. Third scenario tomorrow is a spike in channel pattern. This is less than likely, not as likely for tomorrow, just because we went so far today. This is probably the third scenario to expect for tomorrow. And the fourth one, believe it or not, is a reversal. It is a reversal. It is a 1, 2, 3 reversal, marking up that new channel. Basically the same thing, right? The same thing that we did today going lower, except we do the opposite, going back higher again. Those are 4 scenarios that I'm looking for, and really we're going to make sure we're ready for here tonight on this video. Now, on the left-hand side there, that spike in range, I'm selling above the range. On a flag pattern there over in the middle, right? I'm selling underneath the channel. On a spike in channel pattern, I'm selling up. That's not where I'm trying to go. I'm selling up at the high, right, of the base of that channel. That's where I want to sell in a spike in channel pattern. And on a reversal, not selling it, but buying it off the low of that hidden channel. Here's your chance now to grab a screenshot. Want to grab that screenshot right now? 3, 2, 1. Pause the video. Go back if you need to. Grab those screenshots. Spike in range. Spike in flag, right? I got my eyes on that bad boy for tomorrow. Spike in channel, maybe. Oil looks pretty good for a spike in channel. And then I think what all the Robin Hood buyers right now are hoping is we get that reversal tomorrow, right? All the dip buyers are hoping they get that reversal. If you're a pure trader like we are here on this newsletter, you could care less what direction it is, right? All I care about is good setups. So 4 different setups here. Let's talk about the first one. The first one is that, well, let's do this. What would my dream come true be? If I got what I wanted tomorrow, what would I get here for tomorrow? Let me get these off here right now. If I get what I want here tomorrow, we'll pull back with that flag, and we'll get a nice little snap back underneath it, right? If they called me tomorrow and said, all right, Joe, you tell me what you want me to do, I would say, give me a bear flag to rope in some of these buyers and then get underneath it and use it as resistance. This is a great pattern, but I'm telling you, it's painful. It is painful because it's going to make you think this market is bullish. And the reason why it's not bullish is going to be because the sluggishness of the pullback. You know it's a flag when the market is sluggish and it's slow, when it feels like it's molasses, right? It goes really slow. And the channel is really narrow. And what you want to do is you want to wait for the price to get underneath a swing, because that's where that's where buyers are going to be hanging out down there. You want to get those buyers to come in and buy that little swing, right? So over here, it's that one, and then you want to hit them right underneath the underbelly of that channel, right? So if I had it my way tomorrow, that's exactly what my setup would be. It'd be a bear flag, and again, I'm warning you right now, it won't feel like it, but it will look like it. And that's why I say the key here is it's slow. As it's pulling back, it's going to be very slow. In fact, it'll almost feel like something's wrong in the market. And what'll happen is you'll try to get that, right, that breakdown. The buyers will come in and they'll try to buy it. I want to sell the underbelly of that channel. So that's going to be my dream come true tomorrow, right? That would be kind of the dream scenario here on this S&P, right? So we start running higher, And again, what's going to happen is it's going to feel like this market is asleep at the wheel. It will. It'll feel like it. And, when I was a rookie, what would happen is I would eventually start to think, well, my goodness, it must be a bull market now because we're seeing higher highs, we're seeing higher lows. It doesn't feel very bearish anymore. And that's the kind of the context of it. And then once I can get up inside of these sell zones up here, I'm going to start watching for those bears to come in. I'm going to start watching for buyers trying to buy underneath these swings, get up underneath it, and hit it right underneath it, right? So again, what you want to do is you want to let those buyers sort of buy that pullback and then basically sell into what I call a breakout pullback pattern, right? Breakout pullback, breakdown, pullback, and go. The key to this, though, is going to be we've got to get really up off these lows because that's the only way I'm going to be able to get a good risk-reward ratio, right? I don't want this trade down here. It's too low, right? I'm not going to be able to incentivize enough people to get into it. What I get to do is get it high enough, rope in the buyers, and then run it right down their throats back to retest that low. That trade right there, that pattern might be the one that triggers at 10:15 tomorrow, right? I'm just warning you. Like I said, it may be the spoils go to the patient traders tomorrow morning. Now, that's what I hope we get. What I think we'll probably end up getting, though, is a bit of a spike in range. This is the most common, right? When you see a market running sideways here like this, again, anytime I see a big bloodbath like this, the next day you got bottom pickers, you got short sellers. It's going to be a bit bloody, right? The knuckles are going to get a little bit banged up with buyers and sellers tomorrow. My job is going to be to stay away from the choppy spots here, look up in those sell zones overhead, get up above the range. This is where those buy the dip buyers will say, see, I told you they're going to save it, right? And this is where those buyers will come in to buy that pullback, and usually they're going to fail, and I want to be right there to sell right into those stop losses. You're basically playing buy the dip against these buyers, right? You're basically playing it worked last time, it'll work again. I made that mistake a lot when I was a rookie, right? The markets have a funny way of reinforcing bad habits, such as scaling into a loss or adding to a losing position, right? Buying high, selling low. Everybody who bought that big dip last time in mid-March, right? They're going to think the same thing's going to happen here. And chances are not good, right? Last time, it was the reopening of the economy. We're reopened now, right? There's a little bit different personality out there in these markets. This is almost like the sobering of the financial markets here. That's going to be a buyer failure pattern, of course, off the top of that range, right? Now, we also talk about, too, how does this thing reverse, right? So maybe you're wondering, okay, so what does a reversal look like? Here's the third possible scenario. If they can hold that pullback and jump, if they can hold that pullback and get a nice strong jump off of that low, bingo, I'm in, right? Well, I'm not in, but now I know we're bullish. That is a reversal. I'm going to mark up that high. I'm going to mark up that low. And again, this is the same exact pattern that you would have used on the way down, right? The whole move down, this is the same exact pattern. And we talked about it last night, right? A lot of you guys sent me emails and comments on the channel today talking about this pattern. Again, it was bearish, right? But we talked about this last night on the newsletter, right? So as we go higher here, I'm not trying to buy that first pullback. I'm going to try to buy, I'm going to look to buy the second one, right? Now, sometimes this thing really gets cooking, right? Sometimes it jumps up, it pulls back, and it looks very convincing, but still wait, because you don't want to buy too aggressively here. If we do pop higher here, I'm looking to sell into those buyer failures, right? Because we're not going to be bullish just yet. We've got to hold that pullback, jump off the moving average, and then, of course, I can mark that high, mark that low, and then I can buy the pullback off of that low. All right, guys? And don't forget, we're going to do all this together every morning in the trade room. Tomorrow morning, I'll walk you through all of these patterns so you're doing it the right way. Oh, and don't forget, too, if you're not going to join me tomorrow in the trade room, if you're not with me tomorrow at the opening bell, at the very least, grab the free trading course that we offer here at School of Trade. You'll learn all my favorite patterns, my 3-step strategy. So grab the free course. I'll put a link up there for you guys in the right-hand corner of this video. The little pop-up that pops up there. Pause the video if you need to. Grab that free trading course. Learn my favorite setups. Learn my favorite strategy. I'll show you hundreds of examples of how we apply that strategy to our favorite futures markets. So grab the link in the upper right-hand corner. And again, like I mentioned earlier, I'll put all of the the membership links for you guys, all the information. I'll put that stuff down the description of this YouTube video. All right, we're looking good. So now the only last couple scenario here now is if we see a spike in channel. Let's say, for example, the market keeps on going lower here, right? If we keep on going lower at this point, we are dying for a pullback, right? So we are starving for a pullback if the market keeps on running lower. And not a lot changes at this point. At this point now, I want to focus my energy on these swings above that high, and then I want to get up above the high of that channel. I want to get that moving average coming over, and I'm looking for those buyers to try to buy and fail there. So if I take off that rectangle, keep things clean. Again, if we do end up running lower here with a spike in channel, as I mentioned earlier, this is the fourth variation of this. I can now mark up those lows, mark up that high. And remember, at this point now, we haven't seen a pullback. I'm waiting for that pullback up around the highs, not the highs, the channel, but up around the swings above the high of that channel. Remember, at this point, we've had zero pullbacks at this point. So now I want to get up above the high of that channel, get up into those prior swings, get that moving average now to come over, let those buyers foolishly try to buy that pullback. It's way too bearish at that point. I'm looking to sell into those stop losses using, again, what I call a buyer failure pattern. So a couple really nice setups on my radar right now on the S&P. Again, I would imagine the biggest challenge for tomorrow is going to be keeping your head on straight before we really get the best setups tomorrow. Will we get that bear flag I'm hoping for? It'll probably be a range, but either way, you're ready for tomorrow's trading session. Let's keep going here though. S&P, relatively simple on the S&P. We just got to give it some time right now, right, to see what we get here in the overnight. How about the oil? Oil's a little bit more complicated than the S&P, but I think if we look at this though, you'll be able to see here. I think we had a pretty good plan here for this. What do we have on the oil? Well, again, you don't need me to tell you we're bearish right now. Oil goes 7% lower here today, and pretty much right now it looks to me like on oil. Well, it looks like a range, honestly, right? Lower highs, higher lows, flattening moving average. It does look like there's a range, and it shouldn't surprise you tomorrow if this market goes completely sideways here tomorrow, because again, anytime we see this much of a move in one direction, we're probably going to see some chop for at least a couple hours the following morning. And also too, I want to remind you too, this is a 3,000 tick chart now on the oil, right? Why do I use slower time frames for this? Because the volume was so much higher. If I go back to a 2,000 tick, it just confuses the whole situation with too many candlesticks, right? It's that little nuance of using volume to adjust based on your time frames. You don't need that with time charts, just applies, of course, to tick charts, because tick charts are based on volume, right? Or based on transactions. So I think it's a range here. But, excuse me, I think the most important clue, I think the most important clue here is maybe there's a hidden spike in channel here. If I draw a trend line off this high and bring it down to that low, I almost put this right on the chart tonight, but I left it off there just to kind of keep it simpler. It looks like we have here right now is a classic overshoot of a spike in channel, basically up and then back. So I talked about this earlier. If we have a strong move down into a spike in channel, right? We talked about this on the S&P. If we do have a spike in channel, what do? We're waiting for a pop. And it's not just a pop to the high of the channel, it's a pop really up into the base of that channel. Because remember, if it's a spike in channel, there's one thing it hasn't done yet. It hasn't pulled back for us. And everybody's waiting for that pullback. And also, too, once we do get that pullback, you know what's going to happen? A lot of rookies out there are going to confuse this with a reversal. They're going to try to buy that next pullback. And professionals like us are waiting there, right, to sell into those stop losses. Now, remember, the key is I'm looking for it up around the base of that channel. So look at the chart here a little bit closer, I can see here right now that, again, if I roll lower and draw off of those lows, there's that spike in channel right there. There are my edges, right? And so that's going to put me right about that spot right there. Those are the two most important components, other than the fact that we're obviously very bearish. We're clearly 3 legs down. I would anticipate a range tomorrow because of the things we talked about many times already. Now, my favorite pattern. What would my dream come true pattern be? It's very similar to what I just talked about on the S&P, but this one's going to be a little bit of a bigger pop. What I'd like to do is, you know me, anytime I see a range, I drool over these expanding trend lines, right? And this could also be that too, right? It could be setting up here for one big, and again, kind of an overshoot down there, right? It might be, right, just one big triangle here inside of that range. Now, what my favorite setup would be for tomorrow is get up into the top of that battle zone, really push nice and high. Now, that's not going to be a small pullback, right? That's going to be a pretty juicy pullback or pretty juicy move higher here. The buyers will likely want to come and jump all over that, thinking that we're going to go back up to that to basically get that weekend gap at 38.97. Because of the strength of that move, I'm going to look for a nested failure here and sell short back down into that range. Remember, nested failures are just like regular failure patterns, but they have 2 failures. That's where the term nested comes from. It's a pattern inside of a pattern. So that would be my dream come true scenario here for tomorrow. I think the most important thing here would be, though, what do we get in the next couple hours, right? Do we see this thing turn sideways here? If that's the case, once I know more about this range, then I can find more accurate sell zones overhead. And unfortunately, tonight, I may not be able to give you all the details. We may have to kind of pick up where we left off tomorrow morning in the trade room. But once I know more about where that range is, then I'll know more specifics on this. Again, if I had to guess right now, I would guess it's up inside this battle zone area, right up overhead. So again, I would like to see us, if we go sideways here, if we go sideways, this gets a lot easier, right? Because if we go sideways now I can get pretty aggressive. I can get in right now with just a regular buyer failure here and sell back down into that trading range. So again, my dream come true would be a strong move up, buyers chopping around, trying once, trying twice, and me selling it back down in. What you're doing is basically you're selling into the stop losses of those buyers, right? That don't know this is still a bear market at that point. Then, if we do go sideways here, like I would expect we're going to get, at that point now, momentum isn't as big of a deal now. And so now as we go higher here now it can be a lot more aggressive, looking for buyer failures, and I can sell in the stops from there as well. Now, remember, if any of those pullbacks hold, for example, if we go running up, we pull back to the moving average and we jump off the moving average, that is going to be a reversal. Now remember, it's not enough just to get a strong move up, right? We see lots of strong moves going against a trend quite a bit, but most of them are going to fail. So I'm not trying to buy that first pullback. I will be looking for that pullback to hold, though. If it doesn't hold, look out below. We're going back down into that range. I'll mark up that high, mark up that low, and we're looking to buy off of that low now, right off the low of that channel, of course. My target at this point now is easy, 38.97. That is that weekend gap. We would talk about that pretty much all week, right? This last Friday's close. Good chance if these buyers can get a grip on this thing, that 38.97 gap is where we're going to finish up the day here tomorrow. Now, as we go lower here, if we go lower, how would I trade this as it goes lower here, right? So I know how to trade the pullback. I know how to trade it if it goes sideways. What if we go lower here? If we go lower, you really got to be careful. We're 3 legs down. We're obviously pretty happy where we are right now. We're kind of flattening out here at 36. So if we do want to go lower, there is plenty of levels to take out back here, right? There are plenty of levels these bears can start knocking off their list here. But I've got to get a breakout, right? I got to get a breakout. So I don't want to sell it as it's going lower. That's the hardest part. As it goes lower, can I buy it? I can definitely buy it, but I got to use those reversal patterns, right? 2 reversal patterns to get long off the low. One would be a crown reversal, which is basically a nested failure with a trap pattern, right? That would be the first one I consider to be a buyer, right, off of that low. Does that make sense, right? So again, got to go down underneath that low, hit the measured move, and then crown reversal pattern off of that low. Or if we can push down in, we may also get that very drawn out nested failure, which is a lot slower. It'll be one, it'll pull back, I'll draw my trend line, right? It'll pull back, and I'll have to use that trend line. All right, you'll notice I don't get very aggressive on reversals for good reason. For good reason. Reversals are not, they should not make up the majority of my trades, right? They did when I was a rookie. When I was a rookie, all I took was reversals, and it's no wonder I lost a lot of money as a rookie trader, right? Reversals should be a very small portion of your repertoire. You should really focus on going with the momentum if you want to keep growing your account and stop giving the money to more experienced traders. But that is an option here for tomorrow. Again, though, I want to make sure I'm underneath these lows here, really getting right those patterns. So crown reversals and nested failures as we go. Or let's say we do get that strong move down, we pull back to the moving average, and we jump off the EMA. Now it's on, right? I'm not going to chase after it here, and I certainly can't trust that first pullback, but I will mark up that low. I'll mark up that high that finds that new channel. And this was the same pattern, right? You could have used on oil today, on the S&P today. It's a very simple pattern. All it requires is some patience, knowing how to draw your trend lines correctly, sticking them up the channel high, and getting short off of that high. Plenty of targets waiting down below. $32 a barrel is the next big milestone for the bears. That's $4 down tomorrow. So probably, who knows, but probably not going to see 32 tomorrow. We're likely, though, to see, if the bears can take control of this again, we're likely to see, though, a good $2.5 move, though, which will put us where? Down around, 34, 33 and change. So wouldn't be surprised if that happens, but we got to see some proof, though, before we start trying to sell this market. So again, we know how to trade the reversal, right? Reversal's pretty easy. We know where my favorite stuff is for tomorrow. I think a lot of this is gonna really come into play once we know more, right, about this trading range. You know what I mean? I think that range tomorrow will give us a lot more information. If we start going sideways in the range there, what I'll do is I'll start updating for expanding trend lines. Those will become key levels of resistance to sell above. You know what I mean? So we'll update this chart together tomorrow morning as we see more information come our way. Now, how about some questions so far? Right, about 2/3 of the way through the newsletter here tonight. Questions, drop those questions in the comment section below. If you love this stuff as much as I do, hit that thumbs up button for me. And I'll tell you, if you're still with me here on this newsletter right now, hashtag still here, hashtag 1%, right, in the comment section below. It's always great to have you guys here, hashtag and still here, almost 35 minutes into this video. So S&P, oil is good to go. How about some gold? How about some gold here? Gold, a tricky one. Gold is definitely not going to be the easiest one for tomorrow. I mentioned this last night. We've got we had FOMC today, so we knew that gold would probably be a little bit more of a difficult market yesterday, right? Of course, we saw the reaction to it today. What do we know about gold here? Gold's pretty much a bull market into a wide range. And the wide range is really the most important part of this analysis, because wide ranges, you're seeing it right now, wide ranges allow for big momentum swings. So if I was to describe this chart to somebody, if you were to call me on the phone this afternoon and say, Joe, what happened on gold today? I would say it was a bull market into a wide range, and we're now rotating off the high of that range, which means the bears technically have a little bit of that momentum, right? The bears, well, maybe not a little bit, but they have a lot of momentum right now. And so I want to be in a range-bound market, right? In a range-bound market, what do we do in a range? We buy low and we sell high. So with that trading range, I'd like to be a buyer. In fact, that will be my favorite trade for tomorrow. But at the same time, though, there's a big bullseye right down at that low from yesterday at 1714. I could easily see this market continuing here and just kind of grinding lower with one of those spike and channel patterns that we talked about earlier. So those are really my two favorite types of trades here right now going for tomorrow. The spike and channel trade as we go lower, or what will have to be a nested failure pattern here off the low here on the gold. So we know we're bullish overall. But this is a very good example, be aware. This is something you really want to pay attention to, because whenever I see a range, I always know I want to buy low, I want to sell high. So it's very easy for me to just be a little bit too aggressive trying to buy that low. When I have a wide range like this, the market rolls off the high like this. This is a really bearish market right now. Again, it's not bearish that big, right? I mean, look left, you can see we're pretty bullish overall, but there's a lot of bears in the market right now. And so I have to respect that bearishness, even though I do have a range environment. Now, speaking of which, that's exactly what my plan's going to be now for what I would like to see here for tomorrow. I'm hoping that we're going to see some bears come into the market here. And so I always try to put myself in the shoes of the opposite side. What if I didn't really know what I was doing yet, right? What if it was me 15 years ago and I was looking at this just in the pure sense of it being bearish? If I was a seller, if I was a bear, I would probably have a trend line drawn off of these lows up around that high, and I'd be looking to sell short around those highs. So I know we're bullish overall, right? And in fact, you can definitely see here, we got a little channel here I'm drawing in. So it's not difficult to imagine this market going higher here. But again, you and I, we know too much, right? We have experience. When I was a rookie, I was not on a 2000 tick chart. I was on a 144 tick chart, and that was my world right there, right? This is a bear market to most rookies right now, or at least it was for me when I was a rookie. So I know what I'd be doing. I'd be trying to sell short off of that, right off of the high of that channel, even though it's the bottom of that range. The problem, though, is I don't want to trade inside the range here. So how do we buy into the exits, into the stops of these sellers while we avoid buying too high? Well, how do we look for a failure first without getting in too high? With trap pattern. Traps are my go-to on this. So my kind of dream come true scenario is going to be a 1, a 2, and a trap low off of that low. I want to get some trap here. And again, you'll notice I'm really trying to time this correctly here, where I want to see them get up off that channel. I want to see those bears, right? Try to get short off that high. And if I can get a little trap low on that, that's where the money is, going back up into that trading range. The hardest part, I think, on this gold is going to be if it keeps running lower, right? That's the next kind of thing I'm looking for. If the market grinds lower like this, now this becomes basically a spike in channel, and not a lot changes, but I will start to watch now, as I mentioned earlier, on those spike in channels, right? You watch the bases of that channel and get up and sell it back down from there. So if the market keeps going lower here, let me get rid of this text here so we're good there. Again, I want to buy with a trap below the low of the range. If the market continues to run or kind of bleed lower here with a spike in channel, my job now is to mark up those swings, wait for price to get up, look for those buyers to come in and try to take a swing at it, and simply sell into their stop losses, right? That's exactly my plan here, right? That's my plan here if the market keeps on bleeding lower. Now, that's kind of the, right, that's all the A+ stuff for tomorrow. What if we don't get that, right? What if the market runs back into the range, chops around up here? Then what do? Then I stay patient, looking to buy underneath it. How do we get long underneath the range? We look for these bad boys, right? We look for these guys. We look for these moves underneath the range. We wait for the moving average to come down. We wait for the bears to come in, try to sell short off the moving average, right? And we buy into their stops. Okay, that's the plan if it goes back into the range, right? Now, we may also see another rotation. We rotate from the low, the high, the low. This could easily start rotating as we go higher. Now, this is where things get fun, because if we do see a relatively strong 1, 2, 3 reversal, there's a good chance now that we're hunting not for the high, but the top of that channel. So if I can get a nice strong run going higher here, mark that high, mark that low, I take it back. That's the trade I want tomorrow. That's the one I want. Go back and run the tape. Let's do it again. I'm kidding with you, obviously. But that's also a great trade. right? Because at that point now, you've got all that momentum. It's a wide range. It allows momentum to go. And again, you're kind of leveraging the low, right, to the high of that big channel. All right, guys? So that's some food for thought here as we go up through that range here, right? As we go up to that range here, back to the highs as we go. So 2 try trap to get long below the low of the range. That will be a dream come true. Or that 1, 2, 3 reversal. That's a really nice trade as well. If we get up and we chop around, don't forget, right? You might have to wait a bit tomorrow until the closer to the end of the morning before we start getting that move out, right? That pull back, that failure, and the chance to buy it going back up from there. If it does just roll over here, right? If it does just roll over here for me, marking that low, marking that high, waiting for that pop, right? And then looking for that failure as we go. All right, guys, I think we're looking pretty good on this one for tomorrow. The hardest part is going to be just staying patient if things aren't moving well. Early in, early out, but again, stick around tomorrow with us in the trade room because I would assume the patient traders tomorrow will be the ones who are making all the money towards the end of the session. So gold's ready, crude's ready, S&P is ready. Hope you are ready and hope I'll see you tomorrow morning at the opening bell. Once again, I'll put all of the membership information for you down the description of this YouTube video. Don't be afraid to call me tonight if you have any questions about getting registered for tomorrow morning's trading session. Also, I've got that live support tool on the right-hand side for you. And as always, if you're new here for the first time, make sure you grab the free trading classes as part of that free trial. Learn the strategy, master the setups, and that way when you come back and see me, not next week, again, next week I'll be off on the newsletter next week, but the following week, you'll be able to have all that stuff under your belt and you'll be able to follow along more with me here on this nightly newsletter. But first, we got some money to make tomorrow. Tomorrow, we get back at it tomorrow. Hope I will see you guys and gals tomorrow morning in the trade room. If not, don't forget to subscribe. Hit the thumbs up button for me tonight on the video and drop those questions in. I'll get them answered as soon as I finish up here this evening. My name is Joseph. Have a wonderful, wonderful quad witching next week. If I don't see you guys in the trade room tomorrow morning. Again, I always hate to leave you guys hanging. Be back the week after quad witching. 3rd week of the month of June is coming up next week. I'll be back the following week to keep kicking butt with you guys every evening on this video newsletter. Keep in touch. Don't be a stranger. And we'll see you guys tomorrow morning. If not, we'll see you guys next time. Adios, amigos. Bye-bye for now.